in the last 2 months. Eicher Motors is the one in focus. The stock has cooled off significantly from the top where it was sitting at. While we are expecting a revenue growth of about almost 33%, and that's going to be driven by RE sales. And if the monthly sales data is anything to go by, there should be a fair amount of volume accretion when it comes to Royal Enfield sales. Almost about 30% is the kind of uptick that we should be seeing. Also, you're expecting margin expansion to be driven by lower raw material prices, operating leverage benefits as well. Benefits of improving the scale and vendor consolidation is also going to be aiding the margins for them. But Rahul, what is it that you're expecting from Eicher today, both in terms of numbers, and if the numbers are in line, do you think the stock value or the valuation that it's currently quoting at justifies the kind of growth pattern that you're likely to see in the quarters ahead?
I think one thing we should be clear that I think last few months we have seen the month-on-month numbers have been quite impressive for Eicher vis-a-vis entire year. We've seen the rockbuster performance by the Eicher. So my sense is the numbers should be good, and most important thing what we should look at is the margins. What we saw in Maruti is also post numbers. So I think that's more critical to understand, and obviously the management's commentary over building up the book going forward. So I think these are the two things what we'll be watching for Eicher.
The 126 rupees off for Eicher from the day's high, it is also down very, very sharply.